All right, so we're doing a deep dive today on the Oceanview Harbourview fixed indexed annuity.
Yeah.
And I think,
It's a mouthful.
yeah, it is a mouthful.
Yeah.
I think a lot of people, when they think about annuities, they think about
Right.
like their grandparents
Yeah,
or
super wealthy.
yeah, super wealthy folks. But
Yeah.
I think they can actually be a really smart move for
Sure.
anybody who wants to, grow their savings while keeping things kind of safe and predictable,
Yeah, I mean, especially as you get closer to retirement, it's that balance of risk and reward that people are always looking for, and that's kind of what annuities are getting at.
Right. And I know you know a lot about this, so
Yeah, a little bit.
so tell me more about this whole fixed indexed annuity thing. Like, is this something that people should actually be considering?
Yeah, I mean, you should always be considering all of your options, but this is definitely one to look at, and it kind of takes what you were saying before about a savings account and the stock market. It kind of marries the two in a way.
Is it-
Where you're not fully invested in the stock market, you're not buying and selling stocks.
Right.
You're actually entering into a contract with an insurance company, in this case, Oceanview.
Right.
And instead of being directly tied to the market's ups and downs, your returns are linked to the performance of a specific market index, like the S&P 500.
So like when the market's doing well,
Yeah.
you're doing well.
Potentially.
But when the market's like tanking,
Yeah.
you're not like
You don't lose anything.
losing your shirt.
Exactly.
Okay, that sounds pretty good.
Oh,
I mean, who doesn't love that idea?
especially as you're getting closer to retirement and you don't have as much time to make up for those losses.
Exactly. So this Oceanview Harbourview, specifically, like how does that actually work when we're talking about growth potential?
So with this particular annuity, they have a few different options. You can actually link your returns to a bunch of different indices, the S&P 500, the NASDAQ Q100, even the Russell 2000,
Oh, wow.
depending on how much risk you want to take on. But really what makes these things interesting and what can be a little bit complicated is
Yeah.
the participation rate and the cap rate.
Yeah, those sound a little confusing.
Yeah, a little bit.
Can we break those down a little bit more?
Sure. So think about the participation rate
Okay.
as like you're splitting a pie with the insurance company.
Okay.
So if the S&P 500 goes up, let's say 10%,
Okay.
and you have a participation rate of 80%,
Right.
you're going to get 8% of that growth.
Okay.
So you're basically sharing in the gains.
I like pie.
Yeah, me too.
So that makes sense.
Okay.
So what about this cap rate?
So the cap rate is basically a limit on how much you can actually earn.
Okay.
So say the S&P goes up 20%,
Right.
but your cap rate is 7%.
Okay.
You're only going to get that 7%.
Okay.
So it's basically a trade-off.
Right. So you're not going to get those huge gains, but
Yeah. You're limiting your gains, but you're also completely protected from losses.
Okay.
So that's kind of the trade-off there.
Okay. All right. So that all makes sense. But what about accessing the money? Like,
Right.
what if I need to take money out?
Sure. So Harbourview lets you withdraw up to 10% of your contract value every year without any penalty
Okay.
after the first year.
Okay.
So if you need a new roof or
Right.
want to go on a vacation or something,
Yeah.
you can access some of that money.
But what if something crazy happens? Like I need to go into a nursing home or I Right. get really sick and I need more than 10%.
Yeah, so they actually thought about that too.
Right.
And they have some waivers for nursing home confinement or a terminal illness.
Okay.
So if you need more money in those situations, you can get it without having to pay those surrender charges.
So they're really trying to think about,
The what ifs.
the what ifs exactly.
Yeah.
But what if it's not one of those situations and I really need to take out a whole bunch of money?
Then you're probably going to have to pay some surrender charges.
Okay.
And they might make a market value adjustment, which could affect how much you get back.
Right.
So generally, you don't want to be taking a ton of money out in the early years.
Like-
You really want to let it grow.
Right. That makes sense. It's not like your checking account.
Exactly.
Okay, so speaking of things that might happen, what happens if, like,
Yeah.
I die?
Right.
What happens to the money?
That's a great question. So this annuity has a death benefit,
Okay.
which means that your beneficiaries will get the full contract value without having to pay any of those surrender charges.
Okay.
And if your spouse is the beneficiary, they can even continue the contract.
Okay.
So it can keep going.
That's good peace of mind.
Yeah.
So, okay, so we've talked about you can take the money out if you need to,
Right.
What happens to your family when you're gone?
Yeah.
What happens at the end of the contract term?
At the end of the term, you actually have a few different options. You
Okay.
can renew it at the rates that are available at that time,
Right.
or you can convert it into like a stream of income payments, like an annuity,
Okay.
or you can just take all your money out.
Right.
No penalties at that point. And if you don't choose any of those options, it'll just automatically renew.
Okay, so you don't have to make a decision
Right.
right then and there.
Yeah, you can just let it ride.
Okay. All right. So,
Yeah.
Yeah. Tell me a little bit about Oceanview, the company.
Sure.
Like, who are these people?
They're actually pretty well known in the industry.
Okay.
They're known for being financially stable,
Yeah.
and they have some pretty disciplined investment strategies.
So they're not like gambling with my money?
No, not at all.
Okay.
They're trying to make slow and steady growth over the long term.
Okay, so it sounds like overall, this Oceanview Harbourview annuity
Yeah.
offers a way to grow your money safely,
Right.
but
Right.
there are some trade-offs, like maybe not as much upside potential.
Yeah, if the market really takes off, you might not participate as much as you would if you were just invested in the market directly.
And there are those surrender charges
Right.
if you take money out too early.
So you really have to think about your own personal situation.
Right. And this is not specific financial advice.
Of course not.
This is just an overview.
Yeah. So,
Something to think about.
yeah, something to think about and talk to a professional about.
Yeah, exactly. And maybe think about how something like this might fit into your overall retirement strategy.
That's a really good point. I think that's something that a lot of people forget to think about is like, how does this one thing
Yeah.
fit in with all the other things I'm doing?
Right.
So definitely something to consider.
Absolutely.
All right. Well, thanks for joining me for this deep dive
Yeah, it was fun.
into the Oceanview Harbourview fixed indexed annuity.
Absolutely.
And, do your own research.
Always.
Talk to a financial professional.
Please do.
But this is at least a good place to start.
Yeah, for sure.
Thanks for listening.
Of course.
We'll talk to you.